Ladies and gentlemen, on behalf of Kaptify Consulting Investor Relations team, I welcome you all to the H2 and FY26 post-earnings conference call of Aimtron Electronics Limited. Today on the call from the management we have with us Mr. Mukesh Vasani, Chairman and Promoter, Mr. Sneh Shah, Whole-Time Director, and Ms. Nikita Shah, Chief Financial Officer. As a disclaimer, I would like to inform all of you that this call may contain forward-looking statements which may involve risk and uncertainties. Also, a reminder that this call is being recorded. I would now request the management to briefly run us through the investor presentation and the business and performance highlights for the period ended March 2026, the growth plan and vision for the coming year, post which we will open the floor for Q&A. Over to the management team.
Good afternoon, everyone, and thank you, Vinayji. On behalf of Aimtron Electronics Limited and our board of directors, I warmly welcome all our investors, analysts, shareholders, advisors, and stakeholders in today's call. Please welcome. We sincerely appreciate your continued trust, support, and interest in Aimtron's journey. Last 2 years almost, actually, we are only a few days away, a few weeks away from our, to finishing the second years. So, last 2 years Aimtron journey, your confidence encourages us to keep building Aimtron with a long-term vision, strong governance, and disciplined execution. At Aimtron, we are moving forward with our Aimtron 2.0 vision, with strengthening our core electronics manufacturing capabilities, expanding our global presence. You see that we have already acquired a company in, Decatur, Illinois, and building a deeper customer relationship, like, a stickiness of the customer, and creating a more professional, scalable, and future-ready organization. We remain focused, as we promised previously also, on sustainable growth, operational excellence, innovation, and long-term value creation for all stakeholders. Again, thank you so much for taking the time today. As you know, we are only 1 year away from main board entry, and we are very prepared. I guess all the check boxes already checked off, except we have a 3 years timeline. So with your support, once we finish 3 years, we'll move forward on that also, and we started the preparation. I think today your interest is more on question answers and result. So I will hand over to Sneh and Nikita to just give a little overview about Aimtron and result, and then we'll go for question and answer. Again, thank you so much. Really appreciate it.
Thanks, Mukesh, for the brief. Certainly, I think it has been a great story like past 2 years to what trajectory we have changed. So considering that as Mtron, so initially we used to be more on like PCB assembly, more of an EMS, which we redirected towards ESDM, ODM-led manufacturing, design-led manufacturing kind of an activity. And that is now getting surfaced in last couple of quarters result as well. So as Mtron, basically, we are termed as an ESDM, Electronics System Design and Manufacturing. So we are in manufacturing facilities in two geographies. One is in US, which we recently acquired one company that is renamed as Aimtron International Controls, and we do have our presence in Bangalore as well. And the sectors, we'll go more in depth on which are the sectors we are already there. So this year we added more, like one was agrotech, one and aerospace and defense, where we got qualification under certification of ESN 1.0. Hello.
Yes, Sneh, please continue.
Okay. So this year, like we entered a trusted telecom partner, and railways also we started encountering the orders, and our DSO approvals will take place in next couple of quarters, and agreed again So these are the global certifications that we have in place. For instance, 13485 makes us visible globally for medtech products, along with CDSCO, which are now mandatory for Made in India equipments. So we do several things under medtech. 1694 is approved for specific to automotive. 100, as we stated, we recently got approval last year, and trusted telecom partner that also got approved. We are already approved under that last year, and RDSO is something that is under progress, and probably this year by first half or probably by third quarter, we are expecting to get a closure on that part. Next. So probably like this is more on how the Aimtron Electronics India is an holding company. So we created one subsidiary called Aimtron Mechatronics. That's a greenfield project. We acquired a space here in Vadodara itself, where down the line we are expecting to have injection molding, sheet metal, and all that in-house. And then we created a wholly owned subsidiary, Aimtron Electronics LLC, that is in Texas. And that is basically a wholly owned subsidiary of Aimtron India itself. And then Aimtron International Controls is like AEL, probably falls under AEL LLC. AIC falls under AEL LLC Texas. Next. PLI, we applied for ECMS under SFP segment, small fiber optics. So just to give a more brief, like small form factor pluggables that comes from 1G to 50G. Probably India demand is getting aggregated, and it's expected like to 40 to go up to 40G capacity range, and that is what we are also advancing in that direction. So we are working on TOT as of now, transfer of technology with one of the international player that is in progress as of now. And once we get that like TOT signed, and probably down the line, we will be eyeing on how do we have more rollover on that part. So that will be under Aimtron Mechatronics. So this is more often solutions that we provide, product engineering solutions, PES we call. So that includes like hardware, software, firmware, mechanical. And if you see last half of the year, proud to say that our PCBs were in 26 January to what parade it was been displayed. Drones were displayed for the complete China plus one kind of a story because it was more of a defense level. Then we entered railway, where we are providing SL4 level integrated systems, that is anti-collision advanced collision system, along with a couple of signaling orders that we have started getting in. Data centers story probably into the market has started now. We have been working on this since almost a year, where we got one order of $12 million there, where we are designing from scratch, starting from 1 kV, 2 kV, 3 kV with battery, without battery. And the company where we are as of now going with 3 variants, 6 SKUs of it, and probably down the line we are expecting to go more. And then AI dashboard camera, it's as of now getting used in GSRTC, local bus, Gujarat State Road Transportation. And down the line, that is expected to get rolled over in Pan India. Again, not immediately, but down the line, that's what. So this is all are getting manufactured at Aimtron itself, Vadodara factory. Next.
Please, next. Maybe Nikita, you can take this.
Hello everyone. A warm welcome for the financial discussion regarding the 31st March 2026. For H2 2026, Aimtron Electronics reported consolidated revenue from operations of 1786 millions, and EBITDA was 369 millions, and profit after tax was 257 million. H2 FY26 revenue grew at 45.7% over H1 FY26. Over a full year basis, FY26 consolidated revenue from the operations grew at 89.2% year on year, that is 3012 million, compared with the 1592 million of FY25. Profit after tax increased at 79.4% to 460 million, compared with the 256 million in financial year 25. EBITDA margin stood at 22.6% in FY26. PAT margin stood at 15.3% in FY26. This is after the consolidation of the subsidiaries and for the current financial year. So,
next slide.
yes.
I think Sneh, you want to take the order book. Thank you, Nikita.
Certainly, so if we combine all group of companies, probably we stand at somewhere around 600 crore kind of an open order book that includes Aimtron India as well as AIC in total. And geography-wise, probably it's more of an India, it's more of an international clientele with around 20-25% as an export. And when it comes specific to AIC, it's all domestic, that is specific to US market.
Thank you. Next.
I think we can move to
start the
Q&A.
question answer. Vinayji, you have any more slides, or we can start the question answer?
Yeah, I think we'll move to Q&A.
Yeah, because that's the main,
Yeah.
Thank you, actually, Vinayji, and thank you, Nikita and Sneh, sharing. We had some voice a little bit breaking, but hopefully our investor, see that. Maybe you can see on the website and look at the full presentation and see whatever the program information.
Direct.
But yeah,
Sure.
Vinayji,
Thumbnail का image sir को भेज दो.
Yeah, so we'll take the first question from Ashutosh Shukla. Ashutosh, you can go ahead and ask your question.
Hello. Am I audible?
Yes.
Yes, sure.
Hello. Sir, can you tell me the impact of PCB price increase and DRAM shortage impact in the business?
So, it's ENS business. Currently, we have already some of the lock-in price, and so we do not have that much impact directly, indirectly at this point, and because we are not the end user. And what we do, we communicate with our customer and make sure they are prepared. And so we transfer that cost to our customer. So at this point, Aimtron's book, yes, we have some semiconductor shortage, but we do not have that any pricing impact at this point on our EBITDA or on our brand.
Hello. Okay, and one more question.
Sure.
With L&T recently entering in electronic manufacturing services and ESDM space and commissioning its PCB assembly and manufacture facility in Coimbatore, how do you see this development impacting your competitive positioning, pricing environment, and overall growth prospect?
So I think we already in a previous call we already shared some of the information that this is a huge pie, $1 trillion pie, a pizza. It's not even L&T can eat everything. So there is always a way. If you have a niche market, if you have a specialty business, you have a hardened electronics, you have some special things, then there is no way they can beat us. So I think there is enough business, and if you look at our open order book and a pipeline right now is almost $70-80 million just for the pipeline we have. So I don't think so it's going to hurt us. And also, when bigger company comes, they have a bigger overhead, and it's very hard to move Titanic versus a speedboat. So our Aimtron's goal is to be a speedboat versus Titanic. Thank you.
Thank you, sir. We'll take the next question from the line of Amit Jain. Samit, you can unmute and go ahead, please. think we'll take the next question from the line of Mr. Priyanshu Jain.
Hello, am I audible, sir?
Yeah, Priyanshu, you can
Yes.
go ahead, please.
Hi, sir. Congratulations on good set of results. Every quarter we come and you surprise us with the results. I have few questions, sir. First is on the top line basis. So for this year, sir, what is the internal target which we are targeting for this year?
Snail take.
Probably we'll keep our strategy in line with 40-50% CAGR growth, because next couple of years, with this as an base year, I would say next couple of years we are eyeing on 1,000 crore kind of a journey. That is what our ultimate goal is. So you can keep in tech with 40-50% CAGR kind of an growth. That will be that will try to continue to deliver.
Okay, sir. So second question is on the EBITDA margin side. So recently we acquired the ICT one. So due to that, we are seeing some impact on the EBITDA margins on consolidated levels, around 22%, 22.5.
So probably we already have stated. So that company AIC now Aimtron International Controls. So if you see when we bought at that phase of time, it was kind of early double-digit EBITDA itself,
Yeah.
and it's hardly 2 months. We already have started activities on that part. So ultimate goal is like slowly and gradually, probably now this financial year it will get consolidated full year. So we'll see the scope of improvement on what it was there before and what it is now, because we do have expertise on that ESDM market. And best part is we are seeing the synergies, and already transition phase has started and completed. So we know now where exactly to tap and where exactly we can make the bottom line out. So that is where we have started working on that part, and probably down the line you will see the results. Probably like couple of years down the line, we are even eyeing on how do we take it up to the Aimtron kind of a margin, Aimtron level margin for EBITDA as well as PAT.
Okay, sir. So like on consolidated levels, we can assume that 22% is the conservative, like the most least EBITDA margins we can see going forward, right?
Couple of years down the line, not immediately.
Uh,
This year it was early double digit, kind of 11, somewhere around 11% EBITDA.
Sir, on consolidated levels, you're saying?
Standalone, specific to AIC.
Okay. Sir, I'm talking about on consolidated levels. Like so,
Consolidation, we will be intact to what PAT margins and EBITDA we are into. So that PAT 15%, like couple of percentage, 1 or 2% here and there. EBITDA 20 to 22% kind of a range will be intact on the consolidation mode.
okay, sir. So, third is on the top line as we are aiming for 1,000 CR. So, I think for the next 2 years we don't require any kind of a capex. But after that, we are planning. Is there anything which you want to disclose right now?
So I think you can see that our mechatronic facility is coming out, and there is some capacity will be there also. So right now we no need to spend any more unless you have, let's say, 5-10 crore here and there, minor tools upgrade, or maybe small machines upgrade. But we are not seeing another huge expansion cost in the existing setup. But mechatronic will have another setup with 2 assembly lines to start with and 4 assembly lines over there. If you look at this, you don't need that much because we already have 9 assembly lines right now. So in 9 assembly line, we can easily go up to 800-900 crore. So I think at this point, we don't need any other capex at this point. But thank you so much. We can take next.
Sure. Thank you, sir. I would request all participants to limit 2 questions in the initial first round and then come back in the queue. We'll take the next participant, Rushin Shah. Rushin, you can go ahead, please.
Yeah, am I audible?
Yes.
Sir, could you please clarify that how much % of IPs are developed in-house and how much of that is sourced externally or externally acquired? How is company able to manage its design function with relatively low employee benefit costs, especially given that design-led businesses typically incur higher talent costs?
Okay. So we do have like a design team in-house where we have hardware, software, firmware, mechanical, everything. So we have somewhere around team of 45 to 50. And then we do have design partners. So including that, we have a team of around 150 team members. And IP typically remains with customer. We don't own the IP. So we try to be built from scratch and take the manufacturing licensing kind of an activity. And we do support them from scratch, from concept to design to prototype to production, and that too for a complete box build system integration.
With that said, we about our customers' requirement to get to the market easy. We have about 80 platforms ready. That means those are the IPs. We have about number of IPs in the IoT, other areas, controls or storage, power storage. In those areas, we already have a basic design configuration is ready. And whenever customer comes in 3 to 4 months, hey, here's the product, so you can take it. And if they pay, then they own it. If they don't pay, then we take the royalty or contract for 5, 7 years.
Okay. So management is guiding around 40,
Thank you,
50%.
sir.
Sorry?
Yeah, please
Continue.
continue.
Yeah, so management was guiding roughly around 40 or 50% revenue growth. In FY27, if we consider the numbers of consolidated ICS business, there seems almost no growth in ex-ICS business. So can you please throw some light on that?
Sure. So specific to ICS, we have clearly stated growth definitely is there. So growth here, focus is more on EBITDA and PAT level. Revenue, definitely, it is not going to be same as India, like 40 to 50%. So growth over there would be in double digits specific to revenue. But here the main focus is on how do we take it up for double digit kind of a PAT and double digit kind of an EBITDA.
Sure, sir. We'll take the next question from Akash Srivastav. Akash, you can go ahead, please.
Congratulations on delivering very strong result. Sir, actually, I have got all my answers and all the questions of my. I have received answer to all my questions, so I don't have anything further to ask at the
Sure.
moment.
Thank you, Akash.
Thank you.
We'll take the next question from Pratik Bagadia. Pratik, you can go ahead, please.
Yeah, hi. Am I audible?
Yes.
First of all, congratulations for a great set of numbers. I have few questions. First, can you take me through the revenue split between India versus abroad, and also if you could split between different sectors like railways, defense, and so on?
Sure. Kamlesh, if you can just open up that presentation. I don't have the numbers handy, but if you can just open up the slide.
Yeah.
So if you see like probably like this year as well, approximately around 70% kind of an activity was more towards an domestic customers with international clientele. And focus was more on a box build, we have stated before as well. So if you see like major industrial, telecom and power and audio robotics were the top five contributing sectors in terms of industry. And if you see geography, like India and US were the top two. And almost split of PCBA to box build was 70-30 kind of a ratio. And ODM model, because it's like design cost is generally less as compared to the overall project size. So ODM model, that is end-to-end solution, gets splitted to less than 5%.
So the new addition of clients happened basically in which sector in the last 6 months?
It has been a combination of all. Just an example, new sector, if I say, then aerospace and defense, we added somewhere around 2% overall. Railway, we started entering into that along with oil and gas. So oil and gas, probably now we are looking at on something on a higher side. Because last year, if I see, just giving a number, we did almost 424 prototypes. So considering that number, like oil and gas, we are seeing a good traction, and considering to what geopolitical situations are, so it seems to be on a better side to get it on that part as well. So overall, if you see like telecom sector, power sector, and robotics is something that we added in second half of the year.
So, do we foresee the same tailwinds in the similar sectors in the next 1 or 2 years? Or do you see railways or defense coming up as a bigger players?
Railways and defense, definitely we are eyeing on it, but as it is more more, I would say, conversion cycles are too high. So it's not that it is these two sectors are going to dominate it. We are going to be part of that sectors, where again we would be focusing on more of a niche market segment kind of activity to what typically we do. Because as we stated, like this 26 January parade, to what drones were displayed, we supplied the PCBAs. So you want to like to continue with same kind of an project, same kind of an momentum. But other sectors, apart from these two, to what we have stated, probably will try to dominate for this year as well, this current financial year as well.
Okay, fair enough. Thank you. And my second question would be, what would be the top 3, 4 risks that you see in the coming 2 years in terms of execution?
So majorly as of now, if you see, inventory levels, if you see, has moderately increased, and like due to three reasons. One was more of if you see what global situations are going around, chips are getting on shortage and price are getting increased. So that supply chain side is the only factor we see can be a challenge. Rest all, I don't think so. Apart from that, and that is where we started. We already have start taking the annual orders with like monthly and quarterly split deliveries based on customer requirements. So to what all inventory we carry, probably it's more of an customer projects oriented only, where we have minimal or we don't have any impacts from our side at least.
I think if we have a very niche market, people has to use it or take it, is that correct? So, even Corona time, Aimtron did not have any problem. So, I think if we continue focusing on the niche market, complex box build, we will not have that much problem because there is always need and there is always requirement for those kind of product. And we always, ready to go one step beyond, and that's why we prepare for that. Also, very strong infrastructure we have. So something happened, let's say, in a geopolitical situation, and all these buildings, all these properties, even US facility, Aimtron International Control, we have 4-acre land and we have about 58,000 square foot building also. So we have land and building every single place. So we don't have to worry about any kind of turmoil. So as Sneh said, mainly supply chain, but we are communicating with the customers and make sure, I think that's what the main, we see the mitigation for risk. Thank you.
Rohan, do you have any further question? We'll take the next question from Tahir. Tahir, you can go ahead, please.
Hi, sir. Thank you for the opportunity and congrats on the good set of numbers, sir. First question from my side will be, sir, can you please provide info on the operational SMT lines we had for the entire FY26 and the plans which we had to expand expand our SMT lines greenfield expansion, like about we have planned to add one more line in FY27. So what are the updates on that part?
So currently we have Fuji platform, both as well as Bangalore. And the new greenfield project that we are coming up with also will be with same Fuji platform itself. That's in Japanese made. And as of now, like addition is completed and constructions are ongoing. So that facility construction is done. Probably it will be Q3 and Q4. Probably it will be Q4 this financial year. And post that at that phase of time, we'll be having that setup up and running. And initially, we'll be having mechanical setup up and running, and then as phase 2, we'll be having this electronics or PCB or assembly lines commissioning done.
Okay. So we are planning to get it operational by Q3 FY27 for the mechanical part, and assembly line will be after that in phase 2. And when and what is the timeline for that part?
a quarter more on addition of Q4.
Okay, so we are planning to add one SMT lines by end of FY27.
FY27 or Q1 Q1 next financial year. Latest by that time.
Okay, okay. Then second question was on the margins front. Uh, uh, our gross margins has decreased from around 31% in H1 FY26 to 28% in H2 due to the increase in COMC. Was there any raw material price impact during this period?
Probably I would request or suggest that if you can compare year on year, because if you see always first half to second half, there is always going to be a change because I would prefer to go on the year to year basis because if you see year on year, probably we are in line and first half to second half we have scaled up and initially there are a couple of orders from ODM models which got from ODM got shifted to manufacturing and couple of reasons where geopolitical regions where shipment costs were on higher side, supply chain constraints were there. So considering all that aspects, there are going to be minor fluctuation here and there. But if you see the complete year, then probably we are going to be in line with to what we have been projecting.
Also, if we remember, we discussed also last call also and previous couple times that Aimtron's journey is still, compared to like 1,000 crore is still, 300 crore is like, sometimes it's going to be, all the ratios will not meet. I hope I'm communicating. So, because sometimes one customer, one sector, one area is going to be up and down a little bit. So, hopefully, if you have maybe a year after you can ask that question, we'll have a better answer for you. So that's why you will see a real result year over year and quarter over quarter. So once we enter the main board, you will see a better, by that time, or at least our revenue will be more than 500 crore. I think that's what I'm just adding to this next stage.
So we'll take the next participant, Mr. Akshay Kalia. Akshay, you can go ahead, please.
Hi, sir. Thanks for taking my question and congratulations on the great set of number. My first question is regarding the cash flow. So we have generated 40 crore negative cash flow this financial year, and by when can we expect to generate positive cash flow, and what percentage of EBITDA can we convert over the next 2 to 3 years? And also there is one line item of 70 crore loans and advances given to other parties. So can you please elaborate on that part?
Sure. So we'll take second question first. Nikita, if you can take that up because that's more of an internal, just an example like acquisition done for AIC and projection for construction of Aimtron Mechatronics. So we can give more brief on that part. Nikita, if you can just add that.
Yes, regarding the consolidation figures, I can see that loans and advances that is showing at 58.3. Sorry, so are you referring to the consolidated value or a standalone value?
Ma'am, I am referring to the consolidated cash flow at one line item is the 16.8 crore of the loans and advances. I am referring to that only.
Just a second.
Yeah, muted Mukesh.
We can take the other question in the meanwhile, Akshay. Do you have any other question?
Sure, not an issue. We can also connect offline.
Yeah, Akshay, 16.8 crore is given to Aimtron LLC in Texas, Aimtron Electronics LLC in Texas to acquisition. And that is the part of the payment we did from our, acquisition from, Aimtron International Control. So that is the money you see over there, cash flow. But yeah, take the next question by the time Nikita come back. Yeah.
Yes.
Okay, sir. Okay, understood. So yeah, so my second part on that question was to when can we generate the positive cash flow and by what percentage of EBITDA we can generate over the next 2 to 3 years?
Probably, if you see, we are in a aggressive growth trajectory, and that is where these impacts have been there. So if we see once we reach to the stable phase of 1,000 crore, so we may continue with this kind of a momentum because of aggressive growth that we are eyeing into 40-50% and above. Because even if you see past 2 years, it has been 60 to 70% and even above when it comes to the growth trajectory. So initially, to accommodate that growth, we may need to accommodate on that part. But once we reach 1,000 crore kind of a journey, post that we'll be able to see the stabilization on that part.
Sure. Thank you. We'll take the next question from Deepak Poda. Deepak, you can go ahead, please.
Yeah, I'm audible.
Yes, you'll have to speak up a bit louder.
Okay, great. Just a few things from my side. Now, ICS, what's our current revenue and this 280 to 300 crores target that we have is over next 3 years, right? I mean, ideally that 1,000 crores we are targeting, out of the 1,000 crores, 300 we are expecting to come from ICS.
Yes. So on peak, we can take it up to 25 to 30 million. That is what we are eyeing on from specific to AIC, Aimtron International Controls. And this year will be somewhere around 17 million approximately. That is what we are eyeing into.
That's 17 million FY27.
Yep.
So 17 million effectively means around 170 crores, something like that, right?
Approximately.
Okay. So ideally, when we say 45-50% growth, so from 300, even if I take 50% growth, we are reaching from 300 to 450 crores, right? So that is an increase of 150 crores. But 170 crores is coming from this new facility only, right? New acquisition.
So definitely you are good in maths, no doubt with that. But I would say on 300, we are still coming up with 40 to 50% because there would be organic growth as well as a part of India. So if we see on the consolidation mode, like inorganic as well as organic, probably would be in that range.
Okay. So this 40-50% is conservative, right? Because if you see organic growth as well plus the acquisition, so ideally your growth profile would be much higher, right? I mean, historically, I have found you guys to be very conservative, right? And so would that be a right assumption? This 40-50% is a conservative number.
So Deepakji, I think we don't know the geopolitical situation, is that correct? I think we are very conservative and we are very transparent in numbers and commitment. If I say, okay, I'm going to do 70, 80 compared to last year, and they cannot do it, then I don't want to make that mistake. So would like to go with conservative. That's the growth we are eyeing on, 40 to 50%, because we are seeing the open order book, we are seeing the pipeline. And if we can get more, it's good for everybody, is that correct? So that's what, we are looking for more. We are looking triple, but, it may not be possible. Tomorrow, what happened in the White House, tomorrow, what happened in the world, we don't know. So at this point, with the current open order book, we are eyeing on 40 to 50% growth.
Oh, and we do expect organic growth as well, right? That's what you mentioned.
Thank you. You know things. I think you.
Yeah. So I was asking, you do expect the organic growth as well, right?
Yes, definitely.
Okay. So my second question is on your RFQs. I mean, you mentioned around 900 to 950 crores of RFQs we have, right? So by what sort of conversion we are expecting, and by when? And we have around 240 crores of inventory and of money locked in inventory and receivables. So how should one look at that? I mean, it's a substantial number.
Sneh, it's a sales question for you.
So we'll take second question first. Specific to inventory, as now we are more focused on ODM model. It's one of the prime reason where you see that inventory numbers are increasing. It's not to that spike, but there is a moderate increase. And first is like to see if you see our ODM business has grown to almost 2x as compared to the last year. And ODM business naturally requires higher inventory as we need to manage components of assemblies and product readiness at our end compared to pure EMS players. So if you see secondly, the strong growth visibility and customers order pipeline for FY27, that's also one of the important reasons that considering the current geopolitical issues, because we have to stock up certain critical components proactively to avoid getting stuck in supply chain uncertainties. So considering that inventory is moderately high, so that's one part. Receivables, if you see like couple of payments are, if you see this is more of an 31st March results. So out of which almost 40% has already been received because some are 60 days, some are 75 days kind of a story. So we all started receiving that payments and not worried because that conversion cycle keeps on rotating around.
Thank you. We'll take the next question from Surendra Reddy. Surendra, you can go ahead, please.
Hi, sir. Congratulations on a good set of numbers. So my first question is, like you mentioned in the last call, like we have received a like order in the defense from the Mini Ratna. So are we expecting more kind of orders on that segment, and may know the margins on that front?
Certainly, yes, because a couple of Navratna PSUs, like we already started working with them. Now, low or mid-level kind of a quantities, and where like prototypings and pilot phases are already done, and now we are trying to see on how can we scale that projects. So we are working with different divisions of it, and margins probably will be at Aimtron level when it comes to aerospace and defense. Somewhat I would say bit on higher side as well. But when it comes to consolidation, like we generally eye on 15% kind of a PAT margins that we typically look into.
Okay. Uh, yeah, okay, sir. And the second question is like, is there any acquisitions going, or like is any under developments, like under final stage kind of thing, like just like ICS or something?
I think it's too early to say. The reason is current geopolitical situation is kind of a vulnerable. So we look at it a couple more, but right now we put on hold right now. But ICS is called AIC now, but AIC is already up and running, and we start making money on that, and start sending, so it's good thing that, so we are settled down now for that one. We put new ERP system, we put new AIMNet system, we put all this whatever requirement. But coming back to your questions, yes, we are looking couple of places. One of the design-led companies we are looking in North America and in the European market. So we are just wait and watch kind of situation right now.
Thank you. We'll take the next question from Sumit Chopra. Sumit, you can go ahead, please.
Yeah, hi, am I audible?
Yes.
Yeah, hi, sir. I just need one clarification to the question of previous participant. So, any specific percentage you would like to guide or comment upon from the organic growth point of view? Because those numbers are not reconciling, because like he was also quoting 40-50% growth with the current of it seems there will be any organic growth from Aimtron Electronics. So I got you that you are guiding this percentage number from a conservative point of view. But any color you would like to throw from Aimtron without AIC, if you want to comment upon?
See, this is the EMS business. You look at it, every single company. There's a tons of orders and tons of materials that works in the pipeline from everybody, for everybody. So considering that we are seeing organically also, 40 to 50% growth, plus additional, AIC. So we give you a range for 450 to 550 at the end of the year. So you never know what's going to happen in this geopolitical situation. So again, we could have a 550, then your math will be right, is that correct? If you go, let's see, if I say our next year will be around 550 to 600 crore, then everybody will be happy. But let's see, tomorrow something happen in Iran or Iraq or somewhere, then we're going to be screwed up again. So how are we going to do mathematics? Our end goal is to get 1,000 crore journey. If we're going to do either with 40 to 50% growth or inorganic, but we will get that. That's our end goal, and we are prepared for that. We cannot give you exact numbers or a very close number because we do not know the situation. So that is the reason. Yes, mathematics doesn't fit in my mind also. But right now, my goal is, let's see, if I give you 550 to 600 for end of next year, I think you'll be happy and your math will fit in that. But something happened, then You will be unhappy and I'll be unhappy. So that is the reason. Thank you.
Also, I think we need to clarify in the presentation what we've given is CAGR, which is a 3 to 5 year trend that we're talking about, and not just 1 year growth number.
Yeah. Thank you, Vijay, for correcting.
Sumit, do you have any further question?
Hello.
Yeah, Sumit,
Hello.
you can go ahead.
Yeah. Yeah, sir, my second question is regarding the mix of box build and PCBA. So as we can see in H2, this mix has improved from the H1, but the same is not visible in our EBITDA margin. So any specific reason for that?
It's more of a combination of that mode itself because that is getting more of a value addition chain. So, for instance, initially with our existing customers, we were just doing PCBA, just an example I'm giving. Where from there we shifted back to complete box build or complete system integration. So, for instance, initially the PCBA value would be 1,000 rupees, which has now increased that turnaround to 2,000 or 1,500. So, bottom line still remains the same to what we used to before, or it has rather been on the positive side, where even it has helped us for top line as well. So, it is a combination of top line as well as bottom line.
Sure. We'll take the next question from Anuj Haria. Anuj, you can go ahead, please.
Yeah, hi. Congratulations on the great set of numbers. Just following up on the previous participant's question, right? I mean, ideally, we've spoken that box build has a higher set of margins compared to PCBA. So, Sneh, what you just said doesn't make sense, right? I mean, if you're earning the same percentage of margins by expanding the order value, that just doesn't fit in the logical framework from what was commented earlier.
So if you see along with that, there has been change in order trajectory as well. So initially, if you see, it used to be like 5-10 crore kind of an activity for a single order, which trajectory is now changed to 25 to 40 crore to 50 crore kind of a single orders. So that is also a part of it where it's a combination of all factors, not only just for PCBA to box build. Because if you see ODM model, then ODM model probably would have a higher margin as compared to box build as well. So, but if you see what we try to do is we try to combine all the factors and try to see on how do we maintain the PAT at 15 level and EBITDA around 20% and above.
Understood. So for the coming year, that's FY27, we expect the same split, that is a 70% of box build and approximately 30% of PCBA, or you expect the percentage of box build and ODM to rise up to nearly 80%?
It is going to be more or less the same activity where box build is going to be around 65 to 70 and PCB is going to be in that 30% kind of a range itself.
Got
If
it.
I add, Anuj,
Yes.
if I add a little bit to Sneh here, every company has to start with the PCBA, is that correct? Cannot have 100% box build directly. But what Aimtron is looking for, where is a complex PC board, where is a very, high mix, high dollar, those we forecast, those we target. So in our dictionary, we don't separate too much as a box build versus PCBA versus design. We look at first, and our team is prepared. Hey, is fit in our range 13 to 15 or 20 to 24 percentage EBITDA range. If not fit, then it doesn't matter for us. Is a box build or as a PCB only, or it's a defense, or it's an IoT, or it's a telecom. So we are a little different in EMS trend right now. We would like to be a role model to set up a new trend versus separating everything. Find a medical customer, they are doing X-ray imaging. Find a medical customer, they are doing defibrillator. Find a drone who is working as a surveillance. So find those kind of customer, or a Mercedes car, or a somebody Tesla, or somebody. Find those customer. They have either PC board or Caterpillar. They don't care. Either the PC board or either you do just the metal part. Still is the same margin. So that is something we are eyeing on, and that is something our DNA. I think again, I'm not just discouraging you, but those are the thoughts we had. A lot of questions we had in previous. Your machine, how many per hour? How many do pick and place? How many parts they place? Doesn't matter now. What is our EBITDA and bottom line? I think that's what we focus, and that is our DNA, and that's our goal also. Thank you.
Thank you. We'll take the next question from Sachin Gulati. Sachin, you can go ahead, please.
Am I audible?
Yes.
Yeah, thank you for the opportunity and congratulations for good set of numbers. So before asking question, I have one or two suggestions. One is if we can share this PPT little bit in advance, because it is just share so that we can come prepared and go through in advance. Second, till we migrate to main board, can we consider some quarterly business update?
Very good question. And first question will be, me and Vinayji, we work together and see next time. Our goal was to set a trend to give early result. So, my goal is to give every, last Monday of every year or every quarter, I would like to give the results. So that is the reason we have to rush a little bit here and there. But we are, setting the trend, and we will go from there. And then next time we'll make sure we'll give you that, a day in advance. So that is our goal, and we'll do it for sure. Next question here is a quarterly. Yes.
Yes, please go ahead.
Yeah, so quarterly, we are ready for the quarterly. I think this new auditor system, we will try to, do a quarterly, but at least we would like to give you a quarterly update for sure. And, we have only 3 quarters left, and then we have to go quarterly anyway. So we are preparing our team to start quarterly. Let's see how it goes. Our goal is to give you quarterly, but maybe, anyway, we have to learn that anyway. So I think we are ready for that. We'll let you know, and we'll announce accordingly, at the time comes.
Yeah. And second is our PCB was used in drone showcase in Republic Day parade. So what is further progress update as far as this drone segment is concerned?
Sales question goes
Sure. So basically, we are regularly doing monthly shipments for specific to drone for domestic as well as international market. And down the line, we are even eyeing on how do we enter to box build space, like just an example, camera box build assembly and somewhat of that kind payload and all that. So that exploration is already going on. But as of now, PCBA, we are already supplying them on regular basis. Wire harness, we have recently started encountering on that part too. And down the line, we're exploring on how can we do payload systems, camera module assemblies and all. And apart from that, we are also exploring if we can do a complete box build system integration as well.
Thank you. We'll take the next question from Rushin Shah. Rushin, you can go ahead.
Sir, can you please explain the difficulty level of designing a PC board? Like how difficult it is to design a PCB board? Is it very the difficulty level is very easy that everyone can do, or there are any levels to difficulties that we do some very high difficult task which is reflected in our margins compared to other peers?
Your takes me or I take?
Hello.
Certainly, like it can be defined to different levels of difficulties, different stage of it. Just an example, like video game, every layer or every stage you clear, that comes the criticality increases. So we are into that niche market kind of an activity where just an example where someone is making just to say PCB of fan or tube light, that's too easy to do, get things done. But to make this 1 kV, 2 kV, 3 kV UPS, you need an expertise for specific to power electronics, high voltage kind of an activity, where instrument cost itself is around 30-35 lakh to test that equipment. And for battery load testing and all specific to UPS, I'm saying as of now, just in power electronics subject. If you see, it took us 4 to 6 months just to develop one category of product. So that too, because we have an expertise, or else it takes years and years of time and still people are not able to get the products ready.
So Vinayji, in the essence of time, can we take a shorter question and shorter answer? Maybe one question from everybody, only one question.
Yeah, let's finish this first.
Sir, can I ask one last question?
We already covered here. For last time also, Rushin already asked 2 questions before also, Rushin, if you don't mind. Let's have other people please take a listen, we'll take it, yeah.
Sure. We'll take the next question from Darshit Shah. We'll just request all participants to restrict
Only
to one in the
one
initial.
question from participant, please.
Yeah.
Do we already
Darshit, you
have
can go ahead.
hand raised?
Yeah, hi. Sorry, I couldn't go to the presentation properly. So can you let me know how much was the consolidation that happened from the acquisition in the current financials?
$1.6 million, and it was specific for 2 months.
Month and
Specific
half.
to AIC, I'm talking about.
Correct.
We'll take the next question from Somil Jain. Somil, you can go ahead, please.
Hi, Mukesh ji. Hi, Sneh. Congrats on a strong FY26. One question on the order book and revenues. Telecom as a segment, which is, if I remember correctly, not a large contributor to revenues last year. By last year, I mean FY25. But in FY26, it has been a significant contributor, and also as a part of the order book, it's a significant part of that. And similarly, power and data center segment is again a significant part of the order book. Can you talk about products here, the ramp up within these products? Are these led by single order, single customers, single products? And with the potential scale that we can get with these products.
Sure. So if you see specific to like power segment and data centers, so power electronics, there are a couple of customers in that, but of which one of the biggest contributor is S&P 500 company, Fortune 500 company, Ohio-based company, which are a leading player in data centers. So as of now, we are working with them on 1 kV to 3 kV, kind of 6 variants of it, where we do have a visibility of going up to 20 kVA kind of an opportunity just from that one customer, Fortune 500 customer I'm talking about. So which can be like a kind of this year revenue size as well. So can be that big opportunity again, not immediately, but down the line once we are going ahead in this journey. And specific to telecom, we are doing Wi-Fi 6, Wi-Fi 7 kind of an equipment. And apart from that, SFP and all that, fiber optics or optical transceivers and all that are also going to be part of it down the line. So it is going to be a combination of all factors and multiple orders. It's not only one customer contributing to all the complete sector.
Thank you. We'll take the next question from Rohan. Rohan, you can unmute and ask your question. We'll first, Rohan, go ahead, please.
Am I audible?
Yeah.
My question was with respect to something that Sage just mentioned. Um, on the data center end, I think we received some 100 crore order and just wanted to have some more light on that. What is the sort of product and what is the opportunity? What is the revenue that we foresee in the coming future?
So as I stated, we are making UPS for that. There are 6 variants, three sub categories: 1 kV, 2 kV, 3 kV with battery, without battery, that are going to be used in data centers, EPC and commissioning as a backup. And as of now, it's a Fortune 500 company. And certainly, if you see, can be as big as like last year's revenue as well. But again, it is not going to be immediate and one shot. It is going to be a long-term association.
Thank you. We'll first give a chance to participants who've not had a chance to ask any question. We'll take the next question from Aryan Bhatia. Aryan, you can go ahead, please. Yeah, Aryan, you're unmute. Please go ahead. I think there's a problem in his line. We'll take the next question from Jigar Jani. Jigar, you can go ahead, please.
Yeah, hi. First of all, congratulations, sir, on a great set of numbers once again. Hope it continues for a long time. Just one question, which is related to the acquisition. So, could you, if I heard it correctly, the ICS or AIC is doing 11% margins as of now on EBITDA level. and large part of your growth, say next year, will come from this business and the full consolidation of this business, and it will take some time for this to ramp up to our standalone margins, which are about 20% odd. So do you foresee some margin pressure on a near-term basis till this gets kind of coming down
So,
to our levels of 20% odd
sure.
on the standalone basis? And
Let me
just on
just
a data keeping one, what is the execution timeline for the order book that we have of about 570 crores? By when can we see the execution of this?
So
Thanks.
let me just give you a little heads up on this one, so answering this. So if you see, Jigar, after we acquired, we almost slashed a lot of expenses, using a lot of our Indian talents over there in the back end. Let's see, they have 4 people in purchasing. Now we have only 1 person in purchasing and 3 people over here. So from 11% to jump to already 15% right there. I should give a range, but just give you 11 to, let's say 11 to 12 double digit. We had some low double digit. So now we are already mid double digit now. Also, all the machines, all these efficiencies, they didn't have that much. Capacity wise, they have only 55%. So we are adding more that way, saving some overhead. So it's easy to get from lower double digit to higher double digit by mid this year. And even the later this year, it will be a very close to lower double digit to higher double digit. Let's say 18 to 20%. So that's our accomplishment will be. Even though let's see now purchasing power going to be increased. Let's say we used to buy only 200 crore worth of material purchase. Now we are buying 300 crore. Now, so that's way it's going to be also 2 to 3% saving right there. So those are the things in acquisition. We are getting talents. We are getting a lot of other stuff. So that is the reason from lower double digit to higher double digit will be very easy to go. And it will be within a year or two, as we promise, it will be an Aimtron level margin.
So his other question was on the execution timeline of the current order book.
So execution is always 12 to 18 months. Normally we take order only 12 months. But some customer, let's say well-settled customer like ABB, Schneider, over there is Caterpillar. So those customers, they are very stable and they want to buy some of the parts for longer. So we give them 6 months extra. But otherwise, normally in EMS industries, 12 months is the blanket order. So current open order book is 12 to 16 months.
Sure. We'll take the next question from Shaurya Sajwani. Shaurya, you can go ahead, please.
Hello. Hi, Mukeshji. Hi, Sneh. Just first of all, congratulations on a fantastic set of numbers. I honestly just wanted to fundamentally understand the rationale behind the ICS acquisition, more on the product, the market size, the competitive positioning, what synergy it has with our Indian Aimtron. Is it different? Just fundamentally understand what value add is it providing to the company other than the top line and bottom line addition, like, what efficiencies we can achieve, etc.
So if you find some time, go to Aimtron media page. Nirmal gave us about 15 minutes just for this. What we are getting out of this acquisition. He gave also 10 other comparison and why we selected ICS, we call AIC now. In the essence of time, I'm not going to go too much in depth, but you really need to see the video. And that video has every single answer of your questions about what kind of mindset of the ownership, what kind of system they have, why we select, ICS, and whole 9 yard, we call in technical American language. So coming back to main is rugged electronics. Rugged electronics means a lot of is indoor work. Is that correct? We are doing indoor. Let's say a home automation is an indoor, but we are doing outdoor, out to the sun over there. Let's say farming equipment. The equipment is kind of more moisture or rugged or coding or powering. So those are the expertise they have. Plus they have some agri-tech IP. Also they means we have now agri-tech IP. We have also agri-tech means agriculture technology. It's another subject. We don't have that much over here because we are doing a simple farming with tractor only. But if you look at that, all these tools over there is very, very, advance in agriculture also. So those are the scenarios we had, and that's how we selected. But if you have some times, please visit Aimtron, and we can give you more in-person demo what is beneficiary. And you are most welcome to visit our ICS or AIC facility over there when you are in state. So most welcome to see that also. And next call I will bring some videos also, so you can see that and differentiation.
Due to shortage of time, we'll take the last question from Surendra Reddy. Surendra, you can go ahead and ask your question, please.
Yeah. Thank you for the opportunity. Like all come together, like organically, inorganically, and SMT, like a defense, everything. Like, what is the top line and bottom line we can expect for FY27, please?
Say by sales question.
We already gave that updates. Probably we are eyeing on that 40 to 50% CAGR kind of an rollover year on year. So that's the strategy we are building, and that's the platform we are trying to build for both top line and specific to bottom line. If you see that it is more of an 15% kind of a margin with few percentage or few basis point here and there. That is what we are eyeing on.
Sure, sir. Since that was the last question for the day, would you like to give any closing comments before we end this call?
I really appreciate this, investors community, and sometimes we have to say a little different. So sorry, sure, somebody I said, no second question, but in the essence of time, but our goal is to be transparent. Our goal is to bring American quality with Indian talent, and that is scalability we have. We do have a differentiator is we are American company, means American mindset company. And if you look at our building, if you look at our here, our floor over there, you will see the differentiator. So let's hope to get 1,000 crore journey as soon as possible, and that's our goal. With that, really appreciate everybody's time, and thank you so much.
Thank you, sir. Thank you for joining on the call, and thank you to all the participants for joining on the call. This brings us to the end of today's conference call. Thank you.